IPO opens today. Should you subscribe or should you avoid? Deven, the Managing Director of KRChoksey Investment Managers, joins us to talk about that. Deven, hi, good morning. What's your recommendation on the CCD IPO?
Hi, good morning, Sonia. Well, I think on the face of it, I think since the company is coming under the holding company structure, the kind of opaqueness I think that it would carry, particularly for the valuation of CCD business within the holding company, that is basically not giving so much of clarity. So on one side, I think that remains a concern. On the other side, I think not making the bottom line performance or the profits, I think that also remains concern. And they are given at this point of time. However, what I have started looking out, I think, is somewhere else, and probably I find some of the merits in those considerations. On one side, I think on the operating level, they are trying to basically optimize the performance. They are increasing the roasting capacity of coffee, and at the same time, what I am also observing is that I think through better logistic management and supply chain arrangement within the respective stores, they are probably trying to bring down the operating costs. So that should result into profits going forward in this financial year, maybe, or maybe in the next financial year. So that is, I think, remaining promising, and the potential is remaining higher on that side. And one of the important factor which I am also observing in this entire way of looking at things. Sorry, you have any point?
No, go ahead.
Yeah. So one of the other important factor which I observed, and I think though it's not a strictly apple-to-apple comparison, but when you actually look at, I think, Starbucks kind of an operation and the kind of market cap per store that they are commanding, which is I think somewhere around close to $4 million. Vis-a-vis that, I think if you look at the market cap for this company purely for the CCD business, I think after adjusting the net market cap after the holding company, you probably find that I think they are available at around 2 crore per store kind of a market cap. So I think in future, I think it remains, I think, on a very high potential that somebody who look at this particular business would see a lot of potential in, I think, getting the share out of this particular company when it gets listed, and command, I think, the kind of a value which otherwise is getting offered into this particular price. So yes, I think on the IPO price looking relatively expensive, but on the potential front, I think the stock remains, I think, reasonably, I think, on a stronger wicket.
Okay, Deven, we have got a couple of more questions for you exactly on this valuations issue, especially comparing it to Jubilant FoodWorks, where the average sales per day per outlet is actually 61,000 crores, over 4 times that of Cafe Coffee Day's, 13,000 crores. So comparisons are coming, but let's hear out from the management of Cafe Coffee Day itself. VG Siddhartha, the chairman and managing director at Coffee Day Enterprises, joins us now. So first Siddhartha, and then Deven, we want your reactions. Siddhartha, good morning. Thanks for joining. Don't you think that coming up with pure coffee business IPO would have been better than a holding company IPO where there is a complex structure and exposure to business which investors may not want?
I said I raised money 5 years back from the 3 great private equity guys, KKR, Standard Chartered Bank and New Silk Road. And I raised the money in the holding company. So they own 34% of the equity in this company, and they're not disinvesting. Whatever the money we are raising, 1,150 crore, directly going to the company. In that, almost 625 crore will go to the repayment of the debt of the holding company and coffee company, and remaining 500 crore will go for the coffee business expansion. We have clearly told everybody that all the money what we raise next 5 years will go for the coffee business expansion. So all the other business are worth, see today, for example, Mindtree and Sikal put together is worth around 2,500 crore in our balance sheet. But we are not going to put one pie to any of these businesses, or they need any of our money because they are listed.
But that is the question. You put all the money in the coffee business, so why are you doing the IPO for the entire holding company?
I clearly told you that I got a 34% shareholders in my company who also own other businesses. That's the reason I promised them that 5 years back that I will take this company public. That's the reason I'm coming public.
Okay,
but I believe we can build a great coffee business, and any of the investments, if there is any great opportunity to grow the coffee business, we'll take a right call to disinvest and grow the coffee business. But as of today, next 2-3 years, I don't see any opportunity because we got sitting with so much cash now after the issue.
Yeah, exactly. Then why are you raising money? You could easily have sold 16% stake in Mindtree and realized 2,000 crore. That would be double the amount of the IPO money.
No, no, it is not strategic, it is an investment, but just to tell you, Mindtree has given me in last 16 years 40% IRR to me. It is not a bad investment if I'm right. I know I'm not a great investor, but for it has given me a 40% investment. So, and I feel it is doing well, and I'll be there at the right time. Mindtree or Sikala or Tanglin, any of these companies, if they're not going to do or give me 15 to 20% IRR for a longer time, I'll take a right call what is good for me and my investors.
Okay. Will you at all look at selling the stake that is there in Mindtree anytime in the near future?
And as I told you, other than coffee business, anything which is not going to grow for 15 to 20% next 2 to 3 years, I'll take a right call. What is what is good for the investor and myself.
Okay, let's come back to coffee then. Coffee retailing business of the company, accounting for 50% of its revenues, is also growing in single digits. FY15 same sales growth was what? 3.06%. Now, is that good? What growth would you expect for coffee business going by your standards?
See, just to tell you, last year all the food guys showed some anywhere between 6 to 18% negative growth, and we are the only brand which shows the positive growth. And just for your information, last 3 months, whatever the RHP we have filed, we have shown that we have grown at 6.4% same store growth. See, other than that, our office coffee business, we are growing at 30% last 5 years. You know, I think, see, 1 year in a 20-year game or 1 quarter, I don't think it doesn't really matters. And we are interested in building a great brand out of India. This brand is owned by the company. It is an Indian brand, and we are happy to tell you in the last the survey of the most exciting brands of India, of the top 25, we are the top 4 Indian brands.
Okay, yeah, I don't have any doubt in the fact that the brand is very strong, but what about the way forward?
I tell you, I think I tell you honestly, you wait and watch us slightly longer term, because please don't confuse your viewers also, because brand building, it is a game. It takes, see, in US, you take any US brand, it takes 50 years to build a brand. You can't expect a result in 19 years. And 19 years, we are a pan-India operating 219 cities of India and 12,500 corporate of India. So at 450 cities in different corporate. I think me and our team has done a great job. I think we believe we can take this brand to the next level in a couple of years.
Okay, Siddhartha, you know, the aggregate net loss in the company is nearly 205 crores in the last, 39 months. Why is that?
Just for information, it is all depreciation loss. 198 crore is the profit we made last year. In that, after the interest, our cash profit before depreciation was 137 crore. See, because we have put in 800 stores last 4 years and we have put in 20,000 vending machines, all that assets are sitting in the books. That's the reason it is a depreciation. If I had not shown the depreciation, there would have been enough profit coming there. Because we believe in building the brand. That is the reason we have taken so much asset in the company. Henceforth, that's the reason we are putting only 135 stores to improve the profitability. I'm very sure that very soon we'll show good profits.
Okay. Well, you know, the company's 4 years revenue CAGR, the last 4 years, has been about 6.3%. How much growth do you anticipate in the next, say, 1 to 3 years? And which vertical are you the most upbeat on? See,
yeah, you're wrong. In retail, we have grown last 5 years compounded 16%. We have got 300 crore of the procurement and the export business. Purposely, we have not grown that business because the margins in that business is not great. It is only 3 to 2.5–3% margin. But our retail business last 5 years compounded growth is 16%, and our office coffee business growth for last 5 years is 30%. So, except if you remove the export, we can easily see 16–17% growth in our books.
Okay, so 16–17% growth, is that what you're anticipating going ahead?
No, I can't predict the growth today. We'll discuss one day after the issue.
All right. So then give us an idea of how the net debt will look post-IPO and over the next 2 years.
See, holding company will have only 500 crore debt, and the coffee business will have 125 crore debt. But coffee business, we are infusing more than 290 crore for the expansion. That means coffee business, there won't be any debt. but holding company will have 500 crore debt, and the investment dividend is good enough to take care of that 500 crore debt.
Okay. Okay. What are you going to do with your, I mean, leasing an IT park and hospitality business? They don't seem to be your core investment.
See, we have got 120 crore rupees rental income run rate. We are already getting there. We have got 3.2 million square feet already occupied by the client. So we are not real estate guys, but we think that business also will grow at a decent phase. And other businesses are very small. Let's not worry about it.
All right, Mr. Siddhartha, we'll leave it at that. Thanks for joining us, and all the best with this IPO. Deven, coming back to you, one question that I had, why would I want to invest in a holding company IPO like this? If I'm interested in the coffee business, then I'll invest in, say, a stock like Tata Coffee. Wouldn't that be a concern that you would have as well? Because, you're not only stuck with the coffee business, but there are so many other businesses, logistics, financial services, technology parks.
Yeah, Sonia, I think that's what I started my talk with, that I think there is an opaqueness created because of investing, I think, through the holding company. However, I think on a plus side, if I have to put across some of the arguments, I would say that I think the kind of brand that they have been able to build and create under the CCD, definitely I think it demands that I think one gets an entry into that particular brand at some point of time. And certainly I think if it is a separate company, all the more happy situation. But if it is not, I think, and then get into the company through holding company. Just because it is part of the holding company, I would not say no to it. I would rather, I think that, okay, can I get an entry into this particular business? And if that is so, then in that situation, I think one could look for this. For some reason, after the listing, if the stock price comes down, I think it would be all the more attractive proposition to add into the portfolio of this particular company.
Okay.
I was also looking at, I think, some of the acquisitions which I think Starbucks did in past, and I think the consideration that they applied. To my mind, I think given those kind of consideration on a per store valuation basis, if one starts looking at it, then definitely I think there is more amount of upside also left in this particular business. So one could certainly argue for that in a positive manner.
Okay, Deven, 1 minute. We've got Siddharth back. I wanted to ask him one more question. Siddharth, even if I compare the coffee retailing business of Coffee Day with Jubilant Food, your valuations aren't exactly looking attractive.
I personally feel you can't compare any franchise brand with the company-owned brand. Ours is a company-owned brand. This brand can be Indian pride brand in next 20 years. Okay, please don't compare any franchise brand. I got respect for them, but it is a franchise brands and a company brand. It takes money and time to build a company-owned brands.
Fair enough. Okay, we'll let you go. Thank you very much for coming back and answering that question. Deven, will not that plague investors? The fact that, broadly in the retail business, branded retail business, food branded retail business, Jubilant attracting slightly more reasonable valuations, and we used to call Jubilant demanding valuations.
Well, I think I would go with that particular viewpoint that you have a brand which is self-created, and there's somebody I think who is having already enjoyed the brand, I think, which has been created by somebody else. So certainly I think from the perspective of looking at the business, I would think that I think one who has developed the ability to build the brand would probably command better price going forward. What could be the underlying assumption going forward would be that if the stores which they are operating, if they start assuming higher amount of revenue and in turn I think profits, then in such situation, to my mind, I think the entire equation would change and the re-rating business would happen for CCD. So certainly would wait for that particular period, but I would definitely give higher weightage to the company which has probably got, I think, the brand in its favor. Also look at the other proposition. The investor earlier invested in Jubilant more because I think they didn't have option to buy into some of the brands which were created. Now today you've got an option, so might as well some money would get parked into that kind of a situation where you have got the option to invest directly into a brand which has been created.
So you're recommending a subscribe, right?
I feel that I think it should be bought, and if for some reason market gives opportunity after listing at discounted level, it should be bought from the market as well.
All right. Thank you very much. We're completely out of time. Deven, Choksey, thank you very much for joining us in this interesting coffee table discussion. The markets, meanwhile, are holding on to their own flat as far as the indices are the big boys are concerned. Mid caps 0.2% higher, and advanced declines. 2 stocks in the green for 1 in the red. So trading ideas coming for you on Traders Only in a minute.